Plug Power is down over 10% today in reaction to news that Truist analyst Jordan Levy reiterated a hold rating and lowered their price target from $9 to $8 ahead of the company's symposium on October 11th. The analysts updated estimates which reflect more moderate sequential growth in the third quarter due to production timing in the second half of the year and shipments more awaited for the fourth quarter. And here's a quote from the analyst. So while we continue to see meaningful step up in financial financial performance, we believe street estimates for the second half of 2023 are too high, and we see potential for further delays to PTC guidance amidst the threat of government shutdown impacting timing on Plug's financing effort. So blaming the government shutdown a bit there, but what I'll do in this video is I'll go over some of the other Wall Street analyst ratings on the stock. I'll go over some recent buying and selling I've seen on the institutional shareholder list, and then at the end of the video I will give a price prediction based on technical analysis. So with that being said, let's dive right in. So there are 20 different Wall Street firms which are bullish on Plug Power. There are 0 firms which are bearish. So even Truist today, they maintained their hold rating. So they're not even bearish on the stock. They're pretty much neutral. General consensus on Wall Street is that this stock is a buy. And we can see that HSBC actually initiated a buy rating on this stock with an $11 price target in September, so just last week even. Recent Wall Street upgrades coming for this stock, and obviously generally on Wall Street this stock is considered a buy with 20 bulls to 0 bears. The average price target is $22 as well on Wall Street. The lowest price target is $7.50. So with that being said though, let's keep it moving on to the institutional shareholder list. So in terms of the largest shareholders for this stock, it's really the bigger companies. So we see Vanguard Group here with the largest holding and BlackRock with the second largest holding. And we can see that Vanguard actually had bought more of the stock, had increased their holdings by 3.3%. And we saw BlackRock actually sell down their holdings, cutting their holdings by 7% over the past quarter. And then we can see that Citadel also increased their put holdings by 65%. And then we can also see that they increased their call holdings as well. So that's basically just them making a bet on volatility for the stock. So that's kind of all the major shareholder moves for this stock. And then with that being said, let's take a look at short interest for Plug Power. So we can see here that they have 24% of the float sold short at this point in time, which definitely does signal a good chunk of the float is sold short, which obviously signals a high likelihood of a short squeeze. And then we have days to cover at 8. So for those that don't know, days to cover tells you the average days of volume this stock would take to cover the shares that are sold short. So right now it would take 8 days of average volume to cover the shares that are sold short. This is a good measurement of a short squeeze potential. Typically, when we're looking for a stock that has a high likelihood of a short squeeze, we look for a number over 10 for days to cover. So we're at 8.2 roughly, which definitely does signal a moderate to high likelihood of a short squeeze. So I would give this stock as a short squeeze rating pretty much a B- in terms of short squeeze likelihood. And Fintel ranks it as the top 25% of stocks with a high likelihood of a short squeeze. So with that being said, let's look at the company's financials. So first off, let's take a look at their valuation. So obviously I know the company doesn't make any money right now, but we do have a price to book ratio of 1.2, which is actually a lot better than what it has been historically. So historically, this company has had a price to book ratio of 16.3, which is actually significantly above Plug Power's current price to book ratio of 1.2. So definitely signaling that the company's trading at a discount relative to its price to book ratio. For those that don't know, this basically just puts the market cap relative to the book value of the company. So this tells you that the market cap is 1.2 times the book value of this company. Book value just being, the assets that the company has on its balance sheet. So on a price to book basis, this company isn't too expensive, but obviously we don't have positive PE. So anytime you have a company that isn't making money, you always want to look at the growth metrics and see if they're kind of rationalizing that high valuation. And with Plug, we have a 47% growth rating, or actually 47% revenue growth over the past 12 months. And then over the next 12 months, we're projected to have revenue growth of 57%. So that definitely signals that growth is very high for this company, which is good because obviously shares are trading at a 0 PE, no PE. So this company isn't making money, so that's always very important. And then with that being said, let's take a look at the profitability metrics for this company. So we can see that gross profit margin is 26%. So they're losing money for every single product that they sell. So this is revenue minus cost of goods sold. Tells you what a company makes for what it sells. So minus 26% here, definitely not the best number. Really want to see that improve over the coming quarters. And then it's also worth noting that the company has roughly $1 in cash per share. So you're only paying about $5.70 for the equity at this point in time. But with that being said, let's compare this company to some peers. So let's compare this company to Bloom Energy, ChargePoint, and Fuel Cell. So let's start it off with the balance sheet. So we can see here that the company has $1 billion in cash and roughly $970 million in debt. So they actually have $114 million more cash than they do debt. So good to see more cash than debt, but honestly, the company's burning cash at such a fast rate. It really doesn't matter because the company has a net operating cash flow over the past 12 months of minus $1 billion. So the company's going to have to do one of two things: issue new shares or issue new debt. So I would assume they're going to issue new shares just given how high rates are right now. So kind of keep your mind on the fact that this company has an unsustainable balance sheet at this point in time. But obviously that could change. And then Bloom Energy has $767 million in cash and about $800 million in debt, or excuse me, and about $1.5 billion in debt. So they have more debt than cash. And the only other company that has more cash than debt is Fuel Cell, with $381 million in cash and $128 million in debt. But with that being said, let's take a look at the company's profitability metrics compared to peers. So unfortunately, Plug does have the worst gross profit margin. It's actually worse than Fuel Cell, worse than ChargePoint, and worse than Bloom Energy. And then when we take a look at the growth metrics, the company has a compounded 5-year annual growth rate of 47%, which is above all peers besides ChargePoint. So on a growth metric basis, the company does look pretty attractive relative to peers. And then on a price to book ratio basis, the company is looking cheap relative to most peers. So Bloom has a 9 times price to book, ChargePoint has 6.5, we have 1.2 at Plug, and then Fuel Cell has 0.8. So decent number there. And then this company is projected to be profitable 3 years down the line with a 273 times PE ratio, which is obviously well above Bloom Energy and ChargePoint, but it's actually better than Fuel Cell. So this company is projected to be profitable before Fuel Cell, has a higher growth rate than Fuel Cell, and is kind of right in sneezing distance with that profitability metric. So overall, financials don't look horrible, but they definitely aren't kind of the best amongst the peers, if you will. And then let's take a look at the chart and see if we can't give a logical price prediction based on technical analysis for Plug Power. So we just broke support at around $7.30, which is where shares had bottomed in late September. It's also where shares had bottomed in May, which leads me to believe that we come down to test support at around $6 for this stock, which is where shares had topped out in February of 2022 and June of 22. For those that don't know, past resistance acts as new support. I believe that will happen once we come down to test support at around $6. So it's my opinion that shares likely fall down to support at around $6. But I definitely do think we would probably hold. We're at least likely to hold the support level at $6. So yes, unfortunately, I do think the stock likely moves lower over the coming weeks, but I think this $6 range is a pretty good buying range for the stock if you're bullish on this sector long term. So long term for Plug Power, I would really want to see this company move towards profitability before I kind of dove headfirst into some shares long term. But with that being said, if you're bullish on this space, it's not a bad stock to own. So with that being said, I hope you enjoyed the video. I will end it there. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.